Welcome to Mastering Your Financial Life, hosted by Judy Heft, the founder and CEO of Judith Heft and Associates Financial and Lifestyle Concierge. This year, they're celebrating 26 years in business. In every episode, Judy interviews professionals who help others successfully manage their financial lives. You can find this show on YouTube, LinkedIn, Apple Podcasts, Spotify, Google Podcasts, Stitcher, and more. Judy is the author of 2 books, How to Be Smart, Successful, and Organized with Your Money for a Better Today and Tomorrow, and her latest book, Mastering Your Financial Life Cycles, How to Successfully Manage Money in Every Decade of Life. You can read chapters of her books and catch prior episodes of this show at www.judithheft.com. Now here's the host of Mastering Your Financial Life, Judy Heft.
Hey there, welcome. Welcome to our 22nd episode of Mastering Your Financial Life. And today I'm here with my friend Yvonne. Yvonne Cort is an IRS New York State tax attorney, and she works on cautionary and dispute resolution. She's a partner at Capell, Barnett, Matalon, and Schoenfeld, and she's also one of the New York super lawyers. It's a designation that only 5% of New York lawyers receive, so that's really exciting, and congratulations on that honor, Yvonne.
Thank you.
She's also a recipient of the Long Island Power Woman Business Award, which is pretty exciting too. So she's really a mover and a shaker. She writes a lot of articles. She's been quoted in Bloomberg and Cranes and Newsday. So she has a lot of great information. And today we're going to talk to Yvonne about tax issues and how we can prevent any problems or any audits that are coming our way, staying on the up and up. So I guess what I wanted to talk to you about is New York State and New York City audits. And, you know, it's like, where do you live? Because, you know, how do they prove that? What goes on? Like, I know a lot of people, we have a lot of clients that leave New York and they have second homes in Florida, and then they decide to become Florida residents, and they have to be very careful. And, you know, there's just so many different things to worry about with taxes. So maybe you can talk to us a little bit about that.
Sure. I work with that all the time. And it's interesting what you said. How can New York State, it sounded like you said, how can New York State or New York City prove where you're living? Because the burden of proof is almost always on the taxpayer. It's for the taxpayer to show New York State that, yes, they really left New York, or that they really didn't spend that many days in New York or New York City. Because if someone has 2 homes, you know, if you, let's say you live in New York and you have another home in Florida, and then you say, you know what, I'm really a Florida resident. New York's going to say, did you really move? Did you really change your domicile? Did you make Florida your home? And there's all kinds of things to look at. And a lot of people think it's just, changing your driver's license and keeping track of your days. But it's really, have you moved your life? Have you made Florida your home and integrated yourself into the community? Is this where you know, when you come back from vacation and you're back in Florida, you say, so good to be home? Or do you stop in New York for a few days first and say, I'm home, I'm going to see everybody here first? You know, things like that can make a big difference. And then, of course, keeping track of the days. And the same thing comes up, you know, you have people in Connecticut or in Pennsylvania or New Jersey, places around New York, or even it could be, you know, someone who lives in California or Texas, and they get an apartment in New York City because they're there for business, or maybe they're a commuter from New Jersey or somewhere, or even Long Island, and they or Westchester, and they just want a place to stay if they happen to work late, or they want to go to a show or something like that. And in that case, you know, they could be subject to the New York City tax if they don't keep track of how many days they're in New York City. And it's very careful. New York and the individual has to really keep track of their days. Where are they every minute? New York State will order those cell phone histories and see where your cell phone pings off the towers. And they, you know, they'll look at Easy Pass, they'll look at everything. And it's up to the taxpayer to show, I woke up in the morning in Connecticut, came into the city and came home. I didn't stay overnight, and then I didn't go back in for another week, you know, it's only one day in New York. So, you know, it's a lot of record keeping. There are apps out there to help.
Yeah. So what would cause them to do an audit to check to see where your domicile is if you're back and forth? Like how does that come up?
Well, if someone has, if someone moves, for example, then they might be a New York resident one year. And then you get the people, say, who've moved to Florida. They say, you know what? Why am I paying New York taxes? I live in Florida now. I'm not going to file my return, or I moved partway through the year and they file a part year return or something like that. And New York State comes back and says, wait, we saw that last year, all your income was taxed to New York. This year, you're only putting down a tiny little bit as taxed to New York. What happened? And then you have to prove it. And they have their data mining. New York State can find all kinds of things. There was a time they were looking at some of the places. I heard, this may be anecdotal, they were going to some of the places where people who the snowbirds tend to live, apartment buildings, and looking in the parking lot to see who has Florida license plates and are they there too much. But I don't know if they're still doing that kind of thing.
Well, we've had clients that have done that with Florida because they had 2 homes here, one in Connecticut or New York, and then they've decided to become Florida residents. And some of the things that were suggested to them, and tell me if this really is, a good thing to do, is like to join a church or a synagogue down there and to really get involved, maybe get involved in local politics or something like that, to prove that they really are embedded there. It is their home and not up here. I mean, do you think those are some of the things that people should do, or is that just hearsay?
Well, some of it depends on the state. So New York State says they do not look at volunteer or charitable activities, but as far as deciding domicile, but in fact, you can do something like getting involved in the community through attending classes. I've had people who've gotten to adult education. They joined the local poker game, something like that, or mahjong, and certainly getting involved in politics. In fact, when people talk about voter registration, how that where you register to vote can help prove. It's not one of the primary factors. It's one of the secondary factors, but it can help prove domicile. But actually voting in the election in person, especially for the off-year elections, the school board or something like that, that carries more weight. But yes, getting involved. And it's interesting because the different states look at some of these minor, more other factors are different in different states. For example, where is your cemetery plot? New York State doesn't care. You can have your cemetery plot anywhere and it's not going to affect their evaluation of domicile. But I think in one of the states in the Midwest, they do look at where you have your cemetery plot. So some of these minor things, this is where, if you're moving from New York, it can help to have a New York professional advise you, because sometimes the people in Florida, they're dealing with people coming from all over the country, and the rules might be different for the different states to how to prove that you left that other state.
So what is the homestead allowance that they have? I think that's in Florida. Do you know about that?
Yeah, I don't really get involved. I'm not a Florida attorney, but you do file a homestead statement, and that can help. And similarly in New York, people can have a star exemption, an exemption from the school taxes on their primary residence. So if you've decided that New York's not going to be your primary residence, to apply to the state to say, please remove me from that exemption on my taxes, that helps. And again, people may have a rent-controlled or rent-stabilized apartment in New York City. That's supposed to be your primary residence too. So if you have one of those, but now you say, well, my home's really Florida, it's not determinative, but it's a strike against you. Another thing is also, where do your kids go to school? And I've had cases where, the accountant, you just kind of, sometimes you assume something. You assume when the taxpayer, the adult, says they're moving, you assume they're bringing their family, and you're advising them with that assumption. And then it comes to the audit, and the accountant says, why didn't you tell me your kids were staying in New York and living with grandma, or something like that. And the move didn't actually, in that case, they couldn't prove the move. It wasn't easy to prove the move while the kids were still going to school in New York, so these things make a big difference.
There's a lot to think about, isn't there? I mean, it's really dotting your I's and crossing your T's and talking to a professional like yourself to figure out, how do I handle this? What can I do? You can't just, I don't know, has it always been like this? Maybe years ago you could just pick up and move and nobody cared, but now I guess they're cracking down more. I don't know.
Well, actually, it's been this program has been in place for a number of years, at least. I'm not even sure if it's 20 years or more. And they have, I don't remember how many auditors working on this, and it has gotten just picked up tremendously with the pandemic, because so many people decided, why am I living here? I want to go be in my second home. Instead of being in my New York City apartment in lockdown, I'm going to be in my spacious home in Southampton, or my beautiful house in Florida, or my upstate retreat. I'm going to make that my permanent home. And New York State says, well, wait a minute. What do you mean you're not paying New York City tax? What do you mean you're not paying New York State tax? Let's look at this a little bit more. And to prove, when you have two homes, that you shifted from one to the other, that they're sending out these request letters, countless request letters to everybody who says that they moved during 20 or 21, is pretty much getting a letter now saying, prove it. Prove it. You asked for a refund. We're not giving it to you until you prove that you really moved.
So you really have to pay attention. So we're talking
and planning is good. If you know you're going to move, I have people who come in who say, like with you, people who are thinking of retirement and they want to get their finances in order. And one part of that could be, I think I might want to move to Florida or somewhere else. And what do I need to do to prepare for that? It's helpful to know in advance what you need to do and what records you need to keep,
Yeah, that's really important information. We have helped a few people do that too when they wanted to. There've been a lot of things that we've had to, help them get organized so that they can be Florida residents or somewhere else. Yeah. So talking about audits, you mentioned audits. So what's going on with audits? Is the IRS cracking down on audits? I mean, who are they cracking down on, and how are they cracking down on them?
Yeah, the IRS is, during the pandemic and, during lockdown, during, I guess, 20 and 21 mostly, the IRS understood people had a lot of hardships. There were things going on, and they really held off on starting new audits. And even before that, they've had such budget issues. They haven't had the staff. They haven't had the ability to do the kind of audits that they need to do for enforcement and for checking that they're auditing the right people, and really to find people who aren't filing and who aren't paying the right amount of tax. And so now they've even established a new department that actually stood up just before lockdown in, I think, March of 20. It stood up to really focus on non-filers and other people who are not really paying attention to the tax law. And so we're seeing those audit notices come a lot now. They're sort of like ramping up. They look at non-filers, they look at things that don't look right, someone making a small amount of money but paying huge amounts of real estate taxes, for example, or when things don't match up. That's really low-hanging fruit when the numbers on one return don't match the other return, for example, for business. So things don't match up. New York State as well. They also held off for a couple of years, and now they're really ramping up enforcement, not just with audits, with sales tax audits, the residency income tax audits. I'm also seeing employment tax audits, employee retention credit audits. They're trying to, to collect all the tax that's really due, and especially non-filers. There was a report done probably a year and a half ago now, I think, and through an arm of the government, the Treasury Inspector General, I think it was, and they found that the IRS had identified billions of dollars that they were not collecting because they didn't have the manpower. They didn't have enough people to go out and find those people and do the audits and get them for not filing returns. They were aware that these people were receiving money and hadn't filed the returns, and also people who filed returns and hadn't paid huge amounts of money. But mostly it's the non-filers that, they need to get back into the system. And they're making a big effort now to go after them and figure that out.
We get a lot of requests of people, of small businesses whose books are a mess and they haven't filed their taxes in a couple of years. And it's kind of surprising to us, but we get it all cleaned up for them, because that's really an issue if they're just, not even filing because they have no idea what came in. They don't know what went out. They're missing deductions that, they're just messy books are really, not a good thing to have, especially when it comes to your taxes.
Mm-hmm.
So let's take a little break right now, and then we'll come back and we'll talk some more with Yvonne. Thank you.
Okay, thanks.
Hey there. I just want to tell you a little bit about my new book that just came out called Mastering Your Financial Life Cycles. And here it is. It's how to successfully manage your money in every decade of life. I co-authored this with my CFO, Liz Levy. And together we created this manual that's going to help you through every stage of life. We talk about having a baby. We talk about young adulthood, pre-retirement, what to do when you're at that age of retirement. If you're contemplating divorce, do you need an estate plan? We cover all of these, each subject in a different chapter. And I really think that you're going to find this so helpful, because at the end of every chapter, we have checklists that you can look at and you can use, and they can be a guide for you. So this is a wonderful manual that we've created. It's available on Amazon. You can also find it on our website at judithheft.com/book. And we're here for you. If you need anything, reach out. I hope you enjoy the book. Here's another picture of it, just so you know what's going on. Here it is. And I'm really proud of it. It's my second book. And I'd love to have you read it and give me your feedback. Judy Heft, judithheft.com, financial and lifestyle concierge, celebrating 26 years in business. And over the years, I've learned so much. And what I've been trying to do is impart a little bit of this knowledge to you, so I can help all of you become as financially organized as I am. And we're back with Yvonne. So we were talking about, non-filers and the situations and the problems. So what kind of, I know there's probably heavy penalties. So, how can the IRS get that money, and what do they do? And what are some of the ways to resolve these tax liabilities?
Yeah, that's what I deal with every day.
I know.
So, when you talk about heavy penalties, there's penalties for failure to file, then there's penalties for failure to pay. And if it's withholding tax, failure to make all the deposits at the right time and in the right amounts. And then if a business hasn't paid withholding tax, people think, oh, it's a business, I'm not personally liable. But in fact, the government can pierce that corporate veil in a way. What they do is they assess a penalty against the responsible person equal to a portion of the tax, the trust portion of the tax for the IRS, and the full amount of tax, interest, and penalty when it comes to sales tax with New York State. And that for the government, for the IRS, it's called the trust fund recovery penalty. So the individual gets assessed a penalty based on those unpaid withholding taxes from the business. The business can go out of business and close, and the individual still owes all that money with interest accruing, and it's not dischargeable in bankruptcy. And people can get into big trouble. I've seen, unfortunately, many businesses, they're trying to do the right thing for their clients, for their customers, for their employees. The business is going downhill, and they think they can save it, and maybe they wait a little too long. They don't pay the portion they're supposed to pay to the government, and they end up becoming personally liable and for a year or two of withholding tax, and the business folds anyway. And unfortunately, they have a big headache. Sometimes businesses can rescue and come back, and I've helped them with that too. And we can set up a payment plan, an installment agreement, or New York State calls it an installment payment agreement, and to pay over time. Sometimes we can get some of the penalties removed from the business. Sometimes you can set up the agreement for the company, and then they don't come after the person individually, and it gives them some breathing space as long as the company pays it off. And sometimes things have gotten bad for the company, and they've, they ran into problems years ago, and now the company's basically doing okay, but they're never going to be able to pay that $1 million that they built up and that's owed with interest and penalties over a course of several years. Maybe a couple of years they didn't pay, then they got good again, then they didn't pay again. And, and so we can do an offer in compromise for the business and also for the individual if they were assessed personally, right? In fact, there's rules relating to all that. And the IRS will settle those liabilities and gives the company and the individual a chance to make a fresh start and say, look, we've been good for several years. Now we've cleared up the old stuff so we can continue to stay in business, pay our taxes, be good taxpayers, and not have that hanging around our neck. And New York State as well. We do the settlements and the installment agreements, and New York State has different rules about how they do those settlements. They're called offers and compromise, both with the IRS and New York State. And again, it's a chance to give people a fresh start. For businesses, there are added hurdles in getting these done when it's for a business that's still in business. To you want to be careful that you're not giving them an unfair advantage against all the other businesses that paid their taxes when they were supposed to. You have to be able to show what makes it different here, that that they do that they should be getting this the settlement. And it's not something done easily. It's not something done casually. The IRS in New York State will look very carefully at all your books and records and everything going on, and you're required to stay current for 5 years after the offer is accepted. And if you ever miss a payment again, you default and you owe that $1 million again. So they figure after 5 years you've kind of gotten into the habit of being a good taxpayer. So that's something. And as I say, sometimes it's a matter of getting penalties abated. And that at least lowers the amount due, and then they can, makes it a little easier for them to pay. So those are some of the things. And you asked about the risks. What happens? Not just getting penalties, but the IRS issues liens. They can do levies. Mm-hmm. New York State as well has the same similar collection tools. I mean, people say, sometimes they say they'd rather pay their credit card bill than pay their taxes, but the credit card company can't really do anything to you. The IRS, they can seize your bank account. They can put a lien against your house. They can actually take your house. They can, New York State as well. The IRS, for individuals, you could lose your passport. They call these collateral consequences. Sometimes people say, oh, well, more penalties. So I owed 100. Now I owe 120, but when you get something when you want to go on a trip and you can't use your passport, it makes a difference. And in New York State, they suspend your driver's license. Wow. So people who don't pay attention that they owe, $85,000 when they get a letter from the Department of Motor Vehicles saying we're suspending your license, they sit up and they say, oh, I was hoping New York State had forgotten I owed that money. I guess I better do something about it.
So do the states talk to the government? Do they communicate? How do they both know? Like, you file your return with your IRS and then you have your state return. How does that all coordinate together?
Well, I mean, the IRS sends notices and New York State sends notices. And, the really important ones they send by certified mail and they keep a log of it. Mm-hmm. And there are people who say, oh, I never got the letter. And that's not always good enough. If there's certain deadlines that cannot be missed, whether or not you got the letter. There's sometimes an appeal deadline and it's a statutory deadline and you miss that appeal, there's certain rights that go along with the appeal. And if you miss that appeal, then you miss those rights. There may be another way to handle it. For example, if you missed your right to go to tax court to challenge an audit, I see this. You can maybe do something called audit reconsideration and go in a different way and try to get them to look at your papers again. But then they don't have the pressure of, hey, you might litigate this, and, hazards of litigation can be, something that can be helpful for the taxpayer, well, for both sides, really.
How difficult is it to get the penalties removed? I know you can't get the interest removed.
No, you're right. Right. Interest, it's very, very rare, almost, I would say almost never to get interest removed. It has to be the IRS's fault that something didn't happen. But yeah, penalties, they look for something called reasonable cause usually. I mean, and there's something called first time abate. So let's say you've been like a perfect taxpayer, always filing and paying on time, never had a problem. And this 1 year, it was a problem. You can ask, if there was never any late fee, they look back 3 years. And if everything was perfect, then they will grant you that penalty abatement without anything further. But you're only allowed that once with the 3-year look back. And then you'd have to wait like another 3 or 4 years before you could do that again. But so if you've got a history, sometimes people have problems that go for multiple years. Somebody gets sick, there's a fire, there's problems, you have to present it all. And sometimes, a lot of taxpayers are married filing jointly. And the IRS doesn't always say, well, if one spouse was the one in charge of the taxes, that doesn't let the other one off the hook, because that person could have done something to get the taxes done,
Well, isn't there something called the innocent spouse clause? I don't know exactly what that is. I've heard of it. I know someone
that's
tried
right.
to do that once.
Yeah, I do a lot of those. For innocent spouse, you have to have a couple that filed married filing jointly. And at the time the return was filed, the innocent spouse, the person requesting relief, has to have not known or should have known about either that the taxes were wrong, the other spouse left off a lot of money, income from another source. And or that if someone's saying, look, I assumed my spouse was going to pay it all on time. That has to be, that requesting spouse had no way of knowing, and it was reasonable for the requesting spouse to think that the other one was going to be paying. Mm-hmm. I had a case once where, this is like the paradigm case where the wife didn't know that her husband was receiving illegal money. He was getting bribes. And he was spending them all at the racetrack or something like that. And she had no idea. The money never went into her bank account. She had no benefit from it. She had no idea that this money was there, and there was no way she could have. And so she was truly an innocent spouse, and what happened is the government found the illegal money and then said, okay, you got an extra $100,000 a year. You both owe tax on it because it's a joint return. We're adding it to the joint return. And so she, she was an innocent spouse because she had no idea that was solely in his name, and she had no benefit.
She got the benefit.
On the other hand, if you've got somebody who, they're living a luxurious lifestyle, and every year they're signing a tax return that says they only get $10,000 or $50,000 of income, yet they live in a gorgeous home and take lovely trips and, nice jewelry all the time. They should suspect, they're expected to find out what the heck's going on and why doesn't the tax return match their lifestyle?
Probably some of these are divorce cases too, or there's no communication, I would think.
And that's a very good point, because many of the innocent spouse cases, one of the elements they look at is whether you're legally separated or divorced or living apart. And there's some relief that's only eligible if you're in that position. Mm-hmm. I have done them where the partners are still married, but that's, again, it would have to be like that bribery case, But yeah, a lot of times it's when the couple gets divorced, and then now, often it's the wife asking innocent spouse and the husband who made the money. That's the majority of cases that I see, although I have had many that are the other way around. And now the husband's out of the house and the wife gets the mail, and the husband's been hiding the mail from her. She never saw the IRS notices. And now suddenly, what do you mean we owe all this money? This is crazy. And then they ask for innocent spouse, so.
A lot of nuances here. I think this was a really, really interesting podcast talking to you, Yvonne. You're so knowledgeable. Thank you. I learned a lot from you today. I hope our listeners did too. So thank you. How can they find you?
Right. Well, as I'm with the firm of Capell, Barnett, Matalon, and Schoenfeld. So our web address is cbmslaw.com. And I'm on the internet. If you look up my name and tax lawyer, you'll find me. We have offices in Syosset and Manhattan. And I help people all over the country with IRS issues and New York State issues. People who have moved out of state and suddenly New York State's levying their bank account and they didn't even know they owed the money. They'll call me and I'll help them with their New York State matters as well. So yeah, you can find
great.
me.
And I'm sure you're on LinkedIn. They can find you on LinkedIn
Oh,
too.
of course, I'm on LinkedIn. Yes.
All right, great.
Thank you.
Well, thank you so much. This was wonderful having you here today. I know I learned a lot, and I hope the other listeners did too. So thanks.
Well, thanks so much for having me, Judy, and good luck with the book. I think it's fabulous.
Oh, thank you. Thanks a lot.
Okay, great.
You've been listening to Mastering Your Financial Life, hosted by Judy Heft. Thank you for your positive reviews, comments, and sharing this show with others. You can read chapters of Judy's books and catch prior episodes of Mastering Your Financial Life at www.judithheft.com.